Studios in Mumbai.
Hello and welcome to Bazaar Morning Call, live from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me this Thursday morning, my colleagues Sonia and Nigel. Guys, hi, good morning.
Good morning.
Trudging towards the end of the second week of 2023, and it already seems like a long time, right? I mean, like it has been. I mean, we've been in this new year for a while, but that's what markets do.
That's what earnings season does, actually. When earnings
It's like when you take a holiday, you come back, it's like you never left. Right?
It's a rather stretched out week when all the earnings kick in, and it's been a thick week of news flow, right?
Oh, absolutely. And earnings are just starting. TCS is the only big one which reported, but we'll kind of get on the earnings treadmill in a very fast way now. Let's just quickly set you up in terms of what you need to know as we begin another trading session. So, global cues are positive, but I should say once again, not that it has mattered the last two sessions. Global cues have not been bad. The day before, the day before that, but markets here have seen selling pressure high. I'll come to that in a bit. So in terms of global, the 10-year has fallen 6 basis points. The day before, the 10-year was up 9. It's fallen 6. So, flattish. Oil prices, I think, are the only other thing. It's moved up 3%. Brent oil now at about $83 a barrel. So that perhaps bears a little bit of watching. But overall, on the whole, with a 1.7% kind of move on the Nasdaq, 1.25% on the S&P, I would say this is supportive backdrop as we begin another session. Yesterday, and this is the problem, right? We've been kind of head-scratching, saying what's happening with the market here. All through 2022, we've been used to the market globally doing poorly or doing well, and we outperforming. And it's been a bit of reversal as we began this year. So yesterday, the same thing happened. Initially, there was a big sell-off. The market came to within 50 points of that 17,774 level, which is the swing low which was made on the 26th of December 22. That is 17,774. We came within 50 points of that. And then the market bounced. It bounced 150 points only to see another sell-off later in the session. Broadly speaking, if the market has got to have hope of looking up and not looking down, 17,774 must hold on the downside. So that's the broad kind of support you want to, that broad and big support you want to watch as a reference point on the Nifty. On the upside, I would still say the 20-day moving average, it kind of coincides with retracement levels. I'm not getting into that, but the 20-day at about 18,121 would add confidence. You take that out, I think you perhaps are talking more gains from there. This is a short-term reversal level, closely tracked, the 20-day. Banks, we've been highlighting for the last many days, have been doing poorly, but yesterday there was a bit of outperformance which we saw, so relatively better. On the Bank Nifty, the upside level is again the 20-day moving average, which comes in at about 42,798, 42,798. Remember that. And on the downside, because yesterday was a bit of a swing kind of a day, the low from yesterday, which is 41,729, comes into play. That should hold. If that holds, I think you're in a good space, a better shape place, I should say, on the Bank Nifty as compared to what we've seen there for the last many trading sessions. So that's levels. Later, after markets close, and of course, when US markets start to trade, we get, I think, the biggest data point for this week from global markets, and that is the US consumer price inflation number. And I think, it's always been a market-moving data point for the last at least 10 months. It has a significant implication on the dollar and consequently on things like equities, etc. Hopefully, and fingers crossed, if the CPI number this time kind of corroborates what we've seen with ISM services and the wage data and the labor data, I think you're in a good place. Markets could rally, dollar could continue to sell off, and equities could come up a little bit more. And I think that's the big hope. If it's a reversal, I think we all know the markets could get into a sticky, uncomfortable kind of a place once again. But there's no way to kind of second guess this. We just have to get the data, and I think we kind of react to this when we come back tomorrow. But Sonia, apart from the global stuff, right, as we said, earnings are the other big thing.
Absolutely. And, the SGX Nifty for now is indicating that the start will be in the green, right? Up 0.3% because the global handover was positive, as you said. And there's that big CPI data to watch out for. But let's not forget that foreign investors have been selling for the last 14 days now, relentless selling from FIIs. And yesterday as well, the numbers look quite onerous. In fact, over 3,200 crores of selling from FIIs. It was not matched in step with the DII buying. So there is that trepidation. And perhaps that's the reason why the markets gains are seeing a bit of a lid on the upside. It's a very narrow range that the market is in, and from all the levels that Prashant was discussing, the one that we are watching very closely on the downside, of course, is the 100-day moving average of 17,906. It was broken yesterday. So the next level to watch will be the December 26th low of 17,774. So that becomes a crucial support. Now, there are two numbers, the earnings that we're going to watch out for later today. That's HCL Tech and Infosys. Both come post-market. Remember, HCL Tech mid-quarter had scaled down their guidance. So a lot of it perhaps is already in the stock. But let's see what the the cues are. The commentary awaited is whether the furloughs continue into Q4 as well. From Infosys too, it's expected to underperform TCS after 2 quarters of a strong performance. So let's see what comes out from there. And then in terms of local macro data, you have the IIP and CPI data that's out at 5:30 p.m. So tomorrow we'll be reacting to both global and local macro news. I guess there'll be some tentative moves ahead of that. But this morning, the SGX Nifty is indicating that the start will be in the green. So I guess the bulls will take it from there.
Well, that's right. So now what's getting a little bit worrying is the FI selling. As you mentioned, they have been selling for the last 14 trading sessions, or they've sold close to around 20,000 crores approximately. And yesterday they sold 3,000 crores, 3,200 crores. That's the highest net sell number we saw in a single session in the last 3 months or so. So given that this year, you have interest rates higher in India, and there could be a bit of a shift to safer investments, I'll track this FI data very closely. Hopefully, in fact, it doesn't get beyond this 3,000, doesn't get worse from here on. That's about the institutional flows. The Nifty Bank, that saw a relief rally yesterday, and there was clear short covering bounce that did play out there. Nifty Bank was up more than 200 points in trade yesterday, and the open interest was down by close to around 7%. Has it found its form, or is it flash in the pan? Well, we'll know today, so we'll have to keep an eye out on that front. What do the FIs do? Well, they lighten their position, both on the long as well as on the short side, and they continue to remain net short with around 60% of their positionings on their short side. On the index options front, what's giving me hope that, in fact, the 17,800, 17,750 level can hold out in the short term is because they wrote puts very aggressively. Yesterday, they wrote close to around 50,000 put contracts, and earlier they were writing calls aggressively. Well, yesterday, some part of that got, unwound. So that's pretty good news. If things go wrong as well, there is some cushion because there has been consistent put buying. Moving to the options data, then, what were they writing yesterday? It appeared the 17,800 put was very, very active out there. Premium around 25 rupees, or those put buyers actually yesterday got taken to the cleaners because at one point of time the premium went to around 75 rupees and it ended at around 25 rupees. So there is a sense of writing out there. While on the upside, 17,900 call was fairly active. The premium was around 65 rupees or thereabouts, and that's giving you a sense in terms of levels. So let's get straight to that level. 17,750 to 17,800. We have visited it more than a couple of times. So that's likely to be a strong support out there. On the upside, for today's session, because we're getting into a weekly expiry, I'll watch out for the 17,975 odd level. Once we cross that and we can trade about that level, the 17,900 call is being written in such a position that you're going to defend that level. So if you can get past that mark, then in fact we'll see a big bounce. Don't chase the morning opening. That's what's been playing out. Maybe look for an intraday dip so that 55 bump up should get sold into some point of time. Enter at lower levels. That's a suggestion, I think so.
All right, 18,006 or so is where the SGX Nifty is now trading at. We'll see with almost 50 minutes to go for the pre-open session how that changes.